It's good to have you. So are you only bullish on these stocks because you think these pressures are going to be temporary?
Thanks for having me, Kelly. Well, no, I think it has actually less to do with the inflationary pressures, a lot more to do with just the fact that people have more money and they're spending it. And so we're seeing across the board top line beats that are well above expectations. So even if you do get a little bit of labor pressure or commodity pressure, your sales are going to be more than enough to offset that incremental pressure. So you're going to make more money at the end of the day.
Yeah.
So that's why we like the space very much.
This is a key point that I think sort of explains how people can digest all of these price hikes. There are tons of excess savings amongst U.S. consumers. We've had the stimulus checks, but also people just weren't spending in the depths of the pandemic like they can spend now. So they're paying up at Chipotle and they're paying up at the other restaurants you cover, whether the DineEquity names, Cheesecake Factory, Wendy's even. How long can that last? I mean, if we start to normalize, doesn't that mean people can no longer pay the extra premium that these chains are requiring?
Well, I think we've seen some structural changes, off-premise being probably the number one change that's here to stay. When you look at, names you mentioned, like the Cheesecake Factory, pre-COVID, they were doing about 1 million or so in off-premise sales. Now they're doing 4 million in off-premise sales. And that's actually, been pretty steady even as the dining room capacities have increased. And so it's unlikely that it'll stay at 4 million, but it's also very unlikely that it's going to go back down to 1 million. So, whether that stabilizes at 2 million or 2.5 million or 3 million, you've got an incremental $1 to $2 million in sales you're doing without the need to have that much more incremental labor or even kitchen staff. And so off-premise is a huge component of the structural changes that we've seen post-COVID. Number two, we've seen the digital usage at these restaurants skyrocket. Again, another aspect that makes the operations much more efficient. And then perhaps most importantly, there's a lot less competition, so there's a lot more room to grow versus pre-COVID,
Sure.
levels of growth. And so there's a lot of good things happening for the restaurants category right now.
Sure, for the big ones, the publicly traded ones that you cover, and again, your top picks are DineEquity, Cheesecake, and Wendy's. So just one follow-up question about what's going on with the labor force. I mean, we would expect at some point this shortage of workers, if they're feeling the pinch already, for that to continue to get worse, to pressure profit margins and all the rest of it. You don't think that's going to last? I mean, when does it start to get better? Is it in the fall? What are the factors that could cause that to improve?
Well, I think the first time period to watch is September, right? I mean, a lot of the unemployment benefits and schools are set to reopen, and so the expectation is that once those two things happen, we will see the labor force forced to come back to work, and so we'll see what happens after September, but essentially I'm looking at September as the key time period.
Shepard Smith here. Thanks for watching CNBC on YouTube.